maybe like piece of advice in terms of where we are in the cycle is we haven't really seen anything super differentiated that's hitting scale yet. Like meme coins, no, those aren't differentiated. That's basically NFTs, but fungible. And, is it DeFi? No, we've seen that before, multiple cycles. And is it L1s? Like, no, we've seen this before. And so until we start to see differentiation, I think we're still very much in the very, very early innings.
Hey everyone, this episode is brought to you by Uniswap Labs, who is launching the largest bug bounty program in the entire history of crypto. It's a $15.5 million program. This is aiming to be the most rigorously reviewed code base ever deployed to Ethereum. So if you want more eligibility on the scope, rewards, payouts, etc., just click the link in the bottom of the show notes, tell them that I sent you. You'll be hearing all about Uniswap Labs later in the program. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2, Vance. How's Thanksgiving?
Yeah. Good.
Lots to be thankful for.
So much to be thankful for.
Yeah.
Thank you guys for saving my bags.
Did you guys get, I don't know, do you guys spend it with family? Did they ask you, was there a lot of crypto talk around your Thanksgiving Day tables?
Always.
Just purposely cut the attendee list for Thanksgiving so that it's only people that I talk to on a regular basis, so they know not to ask.
That's smart.
It's just me and my parents, so they're just always asking me what I'm doing with my life. I tell them it's going well.
Yeah, like the CEO of Bitcoin treats me well, Mom.
Yeah, no, we're moving in the right direction. But yeah, it was good.
I did a family Thanksgiving down in North Carolina, but I also did a big Friendsgiving thing, and I was a little surprised. Usually, I thought Bitcoin's back up around 100K. I thought a lot of people would be asking about it. Honestly, I got the sense the majority of people didn't even really know. But I've talked to our analysts a little bit who have friends that spend more of their time on TikTok, and yeah, those people everyone knows, and everyone's asking about coins. XRP is fully back. It is the future of finance again. It's
fake business.
Yeah. So I know we talked about this, I think the last roundup that we did about the TikTok stuff. I downloaded TikTok and I've been messing around and just searching crypto, and it is a different, you know what it reminds me of? Do you remember the 2017 era YouTube coins?
Oh yeah, those are still big, by the way.
I feel like that's what this is on steroids, basically. I saw a guy talk about mortgaging his house to buy XRP. It was like, dude.
I saw someone talk about how it's gone up 150,000%, and he goes, well, because of that, it can go up 150,000x. And here's the amount. Here's what it would be if that was the case. It's like, oh my god, we are in that phase of the cycle.
I mean, Ripple is just the quintessential fake business coin.
It is. Vance, can you explain your fake business pivot from meme coin crime to fake business? I
mean, think about Brad Garlickhouse in a suit talking about Ripple being the future of finance. Literally nothing has been built on Ripple in years.
At this point, it's been over a decade.
It's been over a decade. Ripple lost, but it keeps up the veneer of like these like institutional partnerships. And I think it's good and bad. I think it's fine because altcoins are going to go up, and the fake business will rotate into the real business meta. And I think that's what you've seen with a lot of these DeFi coins, ETH, a lot of this stuff starting to pick up. But, I think it's like so few people in crypto are willing to put on a suit and pretend at least to be institutional that the people who are get a lot of credit. And, it's like sometimes the fake business can turn into a real business. And, people have fake jobs, they're fake models, people are on fake diets. I've done some of those. It's like, a lot of things are fake, but I think this is a fake business.
Look, every startup also starts off as a fake business until it figures out what its real business is.
You could say OpenAI is a fake business. It has built real technology, but the business itself is fictional. They lose, $10 billion a year, and they need to keep raising, or else they'll run out of money. And like, the fake business can translate into a real business. And that's not to say that I'm bearish on XRP or that I don't, respect at least what they're trying to do. Like, I get it. real recognize real. They're trying to take something that's dead and revive it. And I think, based on the price, they're doing somewhat well.
XRP Army they're gonna be coming after you, Vance. Do you see people are bridging onto?
Yes, people are trying to get us to buy like Ripple shitcoins. It's like, you idiots. And it's like, people are now being like, you're starting to see I missed XRP. What's XRP beta? Okay, stellar lumens. Stellar goes up. And people are saying that Chainlink is XRP beta. But I think like the meme coin crime versus fake business paradox is like, meme coin crime is just like, you're not doing anything. You're just like trying to, like, Hawk2 just launched. It's already down from 500 to like 75 million. It'll probably go up and I'll just be looking ridiculous. But like, the meme coin crime doesn't go anywhere. Fake business, like, you can generate a real business. Most startups are fake businesses. So that's my take.
A pre-revenue pure play.
Exactly.
Russ Hanneman would be proud. So what is driving your guys' minds the DinoCoin resurgence here? I feel like I haven't gotten a really great explanation of why that is. I find it very funny. Crypto has this great habit of surprising every market participant, and one's like, oh, retail's going to come in and buy our meme coins. And what did they buy? The random shitcoin they had in their, Coinbase from 2018 or 2019 timeframe, which I find kind of hilarious. But what is actually driving this, or is it just random?
I think it's actually really simple in that what overarches this entire effect is price begets narrative begets price.
Yeah.
And it all has to start with some catalyst. And I think the catalyst, and it was official, I believe earlier today, or Paul Atkins is officially named the nominee for the SEC chair. But everybody knew that, and Gary Gensler said he was stepping down on January 20th. Like, everybody knew that this stuff was coming if it hadn't already officially happened yet. And frankly, just like that catalyst in and of itself makes all the people who for the last 3 years have been talking about XRP is going to go to $2 right at some point, because it goes to $2. And then it's like, oh, wait, well, if they're right about this, then what else do they know? And wait, if they're right about that, maybe like Swift is going to get replaced with XRP. And it's like, if you're right about one thing, he may be right about everything. And I think the catalyst here was just, look, comp is up 50% today. It was up higher earlier, but like all of the things that have received Wells notices or have lawsuits or whatever the situation is, all of them are going to do well just because you remove the regulatory risk of a new regulator. And that's the catalyst that starts the flywheel, that starts the narrative churn again. And to Vance's point, then it goes, oh, you missed XRP? Well, what's beta?
Right.
Everything that's in relation to that. And maybe it's Chainlink, maybe it's Stellar, maybe it's other things. But I think the catalyst here was just very obviously the changing of the guard that the election represented.
It's I totally agree with all of that. I would say it's like probably catch-up trade season, in the sense that ETH's catching up to Bitcoin. Bitcoin rallied first. Jito's catching up to Sol, because people are like, okay, Sol at 250, that's kind of expensive. Is there anything that is a fundamental play? That relates. Then there's like the DeFi bid, the apps catching up to the chains. Like, all these things are like catch-up trade season. And I think catch-up trade season is basically in session until Bitcoin breaks 100K, which probably happens this quarter. But people forget, like, it wasn't like crypto all rallied at the same time in 2021. It just like, it was like, it's kind of like this, if you can think about like water sloshing around, that's kind of how the liquidity works. And like, people have ragged on us so much for gaming as a thesis for forever. Guess what's outperforming this week? Gaming tokens. And gaming tokens are a very specific one because it's the largest and most real mass adoption narrative. It hasn't been proven right or wrong yet. I would say we're probably getting more to the side of right, because like Pixels has 1 million users, they're monetizing. There's a few games that are kind of like that. And like, a lot of this cycle, at least what I see on Twitter, is people being like, how do we front run retail? Do we buy memes? Also, a lot of the meme coins that people have created are not actually memes. They're not memes anyone's heard of. They're just like pictures on, like, what is dog with hat? Does anyone like be like, does anyone talk about that in casual? No. So like, the best way to look at retail, if you're really trying to think about like that Machiavellian, is like games are probably how they come in. But like these things move in cycles.
Only other thing I would add is there was I can't remember who put this out. I can try and find it, but there was some analysis done on volume with BTC pairs versus volume with USD pairs. And for the first time, we're starting to see volume with USD pairs actually surpass BTC pairs, which I think is a signal in a number of different ways. And we've talked about this before, probably months ago at this point, where I think the market structure has fundamentally changed broadly in that you're not moving from one asset to the other as you sell, because we have stable coins now as a realistic, opportunity, like hundreds of billions of dollars on chain, but also all the USD pairs are the ones that are outperforming in terms of volume relative to a Bitcoin or an ETH pair. And selling for dollars, I think, is going to be a lot easier for people to do as dollars move in. But you're also not going to see the same effect as much as you have in previous cycles where you're selling your Bitcoin to buy something else and you're selling whatever that is to buy something else. And I think that it'll be really interesting to see, but we're starting to see the volume overtake that narrative as well.
So on I guess like closing note on the DinoCoin front here, one thing that I think people don't necessarily see if you haven't interacted with any of these teams recently is, Ripple, Stellar Lumens, etc. One of the things that they did probably right was they raised a bunch of money in their initial ICO. They sold a lot of that into ETH or USDC. They're really well funded and they're more trad type teams. Like if you interact with them, they feel more like Web 2, very focused on BD. And BD has been like a dirty word in crypto almost for a long time. I sat on in a Cosmos Spaces about a year ago saying, should we do BD? And overwhelmingly people said no. And it's like, what do you mean? Of course you have to do that. These things don't sell. There's no such thing as build it and they will come. You have to do marketing and BD and all that type of stuff. And these groups are poised to do that. So maybe, I don't know, maybe some of them are fake businesses today, but I think some of them might end up being real. Like you might be really surprised about it.
It's like golf, you swing the clubs, you hit the range. That's the fake business. You actually play the game. That's real business. The fake business makes you better at the real business, but it just matters if you can get there.
Yeah. Do you guys see even NFTs were catching a bid? So my horrendous prediction going into this year might actually be
wow with a month left. In the summer, that call was looking terrible, but
oh yeah,
it is like kind of this simple. It's like gas fees are at like 50 on ETH. We're like probably close to $5 to $10 billion of earnings per year. People are feeling richer. The price is going up. They want to buy NFTs. Let's create more fees. You want to take out a loan against your NFT. That's more fees. It's just like the reflective nature of crypto is probably the least understood thing that exists. And it gets to Michael's point of like, a lot of the pairs are now USD denominated, sure. But it's like, imagine a stock market that for a while where if you made money on Tesla, you couldn't sell to US dollars. You had to go buy, Microsoft, or you had to go buy like Airbnb or something.
Yeah, right.
There's so much money in crypto and people ask us, it's like, who buys tokens? Family offices, hedge funds, venture capitalists. A lot of it is the money that's already in crypto. And as that becomes more valuable, that's the wealth effect that drives the cycles of gaming to DeFi, Dinocoins to whatever.
It's wealth effect season.
Yeah.
Wealth season.
I got a question for you guys on this, more of a market prognostication, but it feels like the round number effect around 100,000 is real for something like Bitcoin, and we're in maybe like a range here. And I've just been tracking like the overall total crypto market cap has been going up, where the price of Bitcoin has been ranging or going down for a little bit. That feels to me, again, not a trader here at all, but like some kind of unstable equilibrium, like something has to change there. Either Bitcoin goes down and the market sells off, or I guess it could just, keep going from here. But how do you guys feel about this ranging and alts running dynamic?
I mean, I think there's literally a sell wall at like 99.9K for Bitcoin.
Yeah.
That's what's held everything below 100. And we'll break through it at some point. And when we do, it'll probably jump to 125 in short order.
Yeah.
And that'll have an effect on Bitcoin dominance, all those effects. But I mean, look, there's more money coming in. There's money rotating within. And that is where you're starting to see the total crypto market cap increase in the way that you have relative to the Bitcoin price not moving. And it's the rotation, it's the wealth effect. Like all the things we're talking about are the data that you just described is exactly describing the situation that we were just talking about, where it's the rotation. And the rotation is a constant part of being in a bull market, where it's not your one thing goes up and it goes up to the right over a short period of time and then it comes back down and it never happens again. Like, yeah, sure, there are certain things that do that, but in most cases it ebbs and flows over the course of like months to quarters to years. And I think we're at the start of that. If we're talking about like where we are kind of in the cycle, we haven't really even kind of started the frenzy or the fervor or the craziness yet, because there is one of the questions that we talk about is like, who's the marginal buyer at 101,000 Bitcoin? There's probably a ton of people who are like, ooh, it's over 100, I should buy it. And then the question is like, who's the marginal buyer at 126,000? But these are the types of questions that you have to think about as to like who the marginal buyer will be at those different psychological price points. And also we're talking about, obviously dollarized prices here. In Canadian dollars, in Australian dollars, we're well above 100. It's not a question. And so I think there's definitely going to be some breaking through probably the next few weeks. And there's also going to be a lot more rotation. And we're going to see some new sub narratives take off probably in Q1.
How are you guys feeling about ETH here? I saw that Real Vision or Zero Hedge was tweeting out similar dynamic, I guess, about this sell wall for Bitcoin at 99.9 or whatever, but very different. Like people are basically doubling and tripling down on shorting ETH around 3,800, which it has since kind of broken through. It would also just make a ton of sense to me at this point if ETH BTC just started to rally from here and was up only for a good period of time, because that's been this thing that everyone has just you've seen all the Bitcoiners tweeting the ETH BTC chart for, I don't know, what's felt like at least a year at this point. And
so I've got another chart for you. If you search Benjamin Cohen.
All right.
Yeah, this guy's pretty good. The TA people can either be super hot or super cold. This guy's definitely here.
He's great. He's been on Bell Curve before. He's
yeah.
I mean, just like, Bitcoin, I think it's like kind of pinned below 100K. I think there's a marginal buyer at like 120,000, but I think people are going to be like, oh, I don't know, 102. It's like maybe. ETH, I think, has just been extremely hated on for so long, but now it's like, I mean, the framework for ETH has always been the same for us. When there's the fundamentals and when there's the flows, this thing is going to rally. And you have both the fundamentals and the flows now turning on. And it looks like there's going to be probably a year to maybe 18 months of like ETH being the only other ETF. And that is like, if it keeps up with BTC or it rallies on ETH BTC, like this thing is going to pop. And if you look at just the monthly chart or the ETH BTC,
this is him. There's one chart. I don't know if this, scroll down a little bit. I don't know if this is the right chart, but basically the chart that I was thinking of is his multi-year perspective on ETH BTC. And effectively what it shows is ETH BTC bottoms basically in November, December of this year right now in the 4-year cycle. And it's some number of days post-halvening is when it bottoms, and then it starts to rally. And this is where he gets to this expectation that in 2025 and through 2025, you probably see ETH BTC rally up into the 0.06, 0.07 range. And I think we bottomed at like 0.0312 or 0.03515. But in any case, we're back, towards the long-term average of 0.04. And I think 0.05 is closer. Sorry, 0.05 is the long-term average. We're below that. But his expectation is we kind of like rally back to the 0.06, 0.07. And look, if Bitcoin's at 150K, like the math on ETH is pretty strong there.
Yeah, and I think so it's like the fundamentals, it's the flows, and then I think it's like the narrative sentiment, and it always goes from really, really poor to really great. But I think the framework to getting to great sentiment is like, what's the long-term plan for ETH? And I actually liked the Beam chain presentation. And I also like the timeline because like if you're stewarding a $400 billion asset, you can't come out guns blazing at DevCon and be like, it looks like these meme coins are taking off and we need to like jack the gas limit up and like, scramble all the fighter jets, like panic mode. You can't do that. You need to set a long-term ambitious target for the community. And then the other thing that's been happening this week, especially, is this thing called pumpthegas.org, which is a community grassroots effort to up the gas limit. So if you have a validator, you signal that you want to go to 60 million gas. And I think last night there was 3.5%. I think now it's closer to 10%. And Coinbase and Victor Bunin have been tweeting out like, if we wanted to change the gas limit on our validators, which I think is probably 20 to 35% of the validators on ETH, what should we change the gas to? And it like the number one option right now is 60 million. And it's like, if the grassroots movement comes together, raises the gas limit, cheapens the fees, that'll hit the earnings, whatever. But it shows that like there's a plan. I think that's a watershed moment for ETH that kind of unifies the sentiment. And so we're very pro pump the gas. And we have a ton of validators that we're going to be signaling.
So where do you guys fall on the whole, John Charbonneau wrote a long piece this week about Ethereum's North Star and getting away from the North Star stuff. It seems like the vision that he is arguing for here is a return to the world computer and moving some activity back to the L1. So it's just, there's the gas limit. There's also moving to, signaling towards decreasing time to finality. Eventually you want single slot finality, and just kind of taking a more balanced approach to how much activity lives on L1s versus L2s. Where do you guys roughly fall on that debate?
Look, like John is smart and that's great, but it's like, let's raise the gas limit. And through the period of Ethereum's demise, everyone's been just so cool about it. I think John has actually tweeted out that Sol is going to flip ETH a few times. And now people are just figuring out that like, who do you want to long-term align your brand with? Which chain?
XRP. It flipped Sol.
It flipped Sol.
And look, like, I think with the meme coins and stuff, and like, yeah, it's a great experience, but like, kind of risk turning your chain into like the 4chan chain. Like, is that a good thing? I'm not so sure.
Yeah, I think John's smart. I think there's no reason why we can't do these simultaneously. Pushing more activity back to L1 and running the L2 roadmap. The L2 roadmap is often off to the races already. I would imagine that we're going to see, bases hitting all-time highs, like virtuals is doing well. Like there's so much activity happening on the L2s. I also think, what we have a number of portfolio companies that are moving from that, like we are an app on ETH or we are an app on Optimism to we are our own L2 based in Optimism. And I think the transition from, app to L2 is going to be more pronounced, especially with things like Conduit that make it super simple to build your own L2. And blobs are now burning and have been basically constantly since I think early November. It's been multiple months of blobs hitting above their limit. And if we're able to add more activity to L1, get the gas fees down, incent more, RWAs or whatever activity it's going to be, it's not like there's a single silver bullet that we should all be charging forward. It is a bunch of different opportunities where they will all yield different, effects for Ethereum writ large.
This is also the time when people start to really over rotate super aggressively and give back whatever gains you got. And I just caution people against doing that too much because FOMO is just so powerful. And I can see it for, it just takes losing a bunch of money on really dumb things and watching it go down 95 or 98%, being like, what was I thinking, to just not want to do that quite as much. And I have these, I don't know if you guys, it's an oversimplistic sort of bucket, but to me, it feels like there are three distinct periods around just crypto in general. There's like bear markets when everyone leaves. And even though it sucks in some ways to be going through bear markets, it's very interesting, right? Like people actually try to solve really interesting problems. People, all the tourists kind of leave, and it's an interesting period of time to be in crypto. That's also where a lot of alpha is. Then there's like early bull markets, which like, all right, it's coming back and everything kind of goes up. There's a lot of concentration. So everyone kind of rides the same tied up and makes money together, and it's just great vibes all around. But then it feels like we're starting to get into the last period where there's the wealth effect. There's a lot of dispersion, so not everyone's making money equally. You get a lot of people that come in a very fraudulent way, and it's like less good vibes. It's like late stage bull markets. Does that roughly resonate?
You can feel the greed.
Yeah.
Only thing that I would say is yes, those are the cycles. I agree with that. I think that we are just barely scratching the global wealth effect. Like ETH is not even at all-time highs, nor is Solana anymore. And I think until we get well past both of those, you won't even have the ability to really rotate into a new narrative. Like if we're going to put this in the parlance of 2021, Bitcoin, it has to be at like 250 for us to be in the equivalent realm of positioning from 20 of the previous cycle to 69K of the top of last time. So I think we have a long way to go. And yes, there will be some really wonky things. Internet Computer Definity was worth $100 billion. Like there are things that were just complete fake businesses that never turned into real anything, except for anyone who sold the top. And so, yeah, I think we've got a long way to go. But yes, generally, those are the cycles. We're just like, I don't even think we've really hit the wealth effect yet.
Yeah, and it's literally followed the 2020, 2021 roadmap to a T so far. Like Bitcoin has stalled out basically to the day. And if it were to continue the pattern it's on right now, it would get, December 16th would be it breaks 100K. So that's my personal prediction for when it happens, but we'll see. I think the things that you said, Mike, about just like that first phase of the bull market where everything goes up. Like I remember when Polygon went from like 30 cents to like $1.20. I think it's down to like 50 again, but like you kind of have that first wave.
Yeah.
You have the second wave where it's more kind of equal. And the difference this time is the ETFs. And, like, can you pull up the ETHA chart?
Yeah.
That's the only chart these people see. Like there is no like, oh, went to 80 in like 2016. It was like, went to 800 in 2021. It's like, nope, this is the only chart they see.
You've made 20% since August.
Like this thing is a chart that's just like going to a new all-time high if you've never seen this before. And IBIT looks mostly the same. But obviously it's sold out around here for even like a week. But like this is the context in which most of the world who's buying these coins are operating.
So I agree with you. So that wealth effect I think is really important. Where do you think we are in like I heard you say like in 2021 parlance, we need Bitcoin at 250K. Do you feel like that's a reasonable level to get to this cycle? Or I know this we're just speculating here.
Good.
Financial advice, Adam.
No price predictions. Look, I think the way to think about this is, and it's not the exact same thing, but the way to think about this is the same context of what are called Elliott waves, which is basically like how things move over time when you're in a bull market. And I think that it's like there's 5 Elliott waves until you hit the peak. And we're in the like 1, maybe 1.5 Elliott wave. And these things move kind of like in ebbs and flows. And then you get like stalled out on Bitcoin and then you catch up on everything else. Because I think a lot of the reason why it's not necessarily rotation out of Bitcoin. It's people who are like, okay, I bought a bunch of Bitcoin, it stalled out. Like what's going to catch up? Like what's going to be the next thing? They're buying ETH, they're buying DeFi, they're buying gaming tokens. But yeah, if we're to think about this in terms of from 2017 peak, which was 20,000, to 2021 peak, which was 69,000, the 69,000 peak of 2021, multiplied by about 3.5, that puts you, pretty well above 200K for Bitcoin.
All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed code base ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap V2 and V3 without a single hack. So Uniswap V4 is dedicated to bringing that same level of security and transparency to the V4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there's a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today.
It'll be an interesting cycle here. We talked about this just at the top of the episode. I think, Michael, you mentioned, but we have a new SEC pick from Trump. So this is Paul Atkins. So he was the SEC chair under Bush. I was reading up a little bit on him today. It seems like he's very staunch libertarian.
I don't think he was chair. I think he was a commissioner.
Okay, commissioner under Bush. But he's been seen as he's got a libertarian by background. Has been pretty vocally positive on crypto in general. I think he sits on one of the committees of the Chamber of Digital Commerce. He actually advises at least one crypto startup because that token rallied about 100% in the day before it got announced. We don't need to name any names here, but
ooh, it's crime.
All right. So what does this guy mean? I mean, how are you guys viewing this? Like, is this positive for crypto? What do we know about Paul, and how positive is he going to be for the space, do you think?
I only know what I've seen on Twitter from like the sharpest legal minds of the crypto Twitter movement, and they all approve. So I think it's a positive, and it sounds like, he's a lawyer. So I don't think it's like, no holds barred, let's launch Hawk2A coin, let's launch all this stuff. I think he's going to be a pragmatic regulator that also establishes like real rules. I don't think it's like crime cycle continued. I think it's like, okay, adults are in the room. There's going to be looser rules, but there are going to be rules.
Well, so one part, and this is just total conjecture, my own personal opinions. I haven't even really heard anyone talk about this. I think it's interesting to think about what are the like prime motivators of people like Gary Gensler or Paul Atkins, and what we at least know now about the Gary Gensler show was he was an aspiring politician. There were rumors that he wanted to take over the open seat for the Senate in Maryland. There were rumors that he wanted to become Treasury Secretary if Biden got reelected. Like all of these rumors like kept on popping up, and they were pretty consistent. And he had already been CFTC commissioner. SEC is kind of like the next step up, and you would imagine like there's a higher step that he could have potentially earned, had political wind shifted in a different direction. There was also a lot in the backdrop of him currying favor with Elizabeth Warren to do her bidding through the SEC, and then she would kind of give him an opportunity to take a step up. So like all this stuff was kind of going on in the background. And what we at least know, at least what has been talked about on Twitter, and I think this was reported on like Zero Hedge, is that Paul Atkins was reluctant, at least at first, to take this job.
Yeah.
And he didn't necessarily want it, and I think was asked to take it as more of like a favor. And he'd be a good person. He'd help shepherd this industry. Even in Trump's tweet, he said we need to foster innovation in the digital asset space. And in the tweet that he was naming Paul Atkins as the nominee. So it's very clear that at least Trump is seeing him as someone that can help foster innovation within our industry. But I think the biggest part here is just the fact that he's not trying to use this as a stepping stone to something else. He's a partner, so a very successful lawyer at a large law firm. I think maybe even his own, or in any case, he's successful in his own right. And I don't think that he is using this, as a next step, which ultimately is one of the best things that we could have, because anyone I think would have been better than Gary Gensler, but it seems like someone like Paul could be, a benefit to this industry.
It's interesting to think about it from the personal motivation standpoint. People have talked about the issue of when it comes to the people that run these regulatory agencies are ambitious people. And what do ambitious people want to do? They want to grow their remit. They want to scale teams. They want to increase their status and importance. And that's clearly not the mandate that's coming from this administration. It's actually the opposite of that. So it's interesting to put yourself in the shoes of someone who's going to take over one of these agencies and, in theory, I don't know anything, but maybe make it smaller or decrease the remit. It'd be
It's
great.
also
I think.
just like imagine all of the what were those talks with Gary where he'd be those
Oh my
super
God.
cringe like be careful and this it's just like he
What
wanted
is
to do that.
steak? No, not
Right.
that type of steak. I was like, dude. Yeah.
Trying too hard.
Yeah.
Way too hard. I think yeah, we'll see. I think is the answer, but I think it looks really positive on its
Yeah.
face.
Mm.
I think one of the probably last ones is just like Hyperliquid and that airdrop.
Oh yeah. Yeah. So I can tee it up for you guys, and I would love to get both of your takes. So Hyperliquid is, and I'm just going to put my hand up here. I'm not a perps trader. I'm not very familiar with the perps dex landscape. I do think it seems like every 6 months there's a perp dex which is going to completely change the game from Rollbit to it wasn't perps but Lyra or whatever the sort of new perps dex is. But Hyperliquid launched. It's a decentralized exchange, although it seems like mostly what that actually means in practice today is I think there's a test net with 40 validators, but really it's 4 co-located validators, which are run by the team. And so even though it's technically a decentralized exchange, that type of thing, I think there are probably a good amount of trust assumptions. But what they've been able to trade off there is they provide a really great UX. So you have to go up to Arbitrum, but the bridging experience from Arbitrum to Hyperliquid is flawless. And I talked to a bunch of our analysts about this and just asked, what is so good about Hyperliquid? And a lot of these other perps dexes are very wonky, like weird UX things. So one of the things that Hyperliquid got right was, it's one-click trading as opposed to on other perp dexes you have to do, it's technically one click, but that only allows you to trade a certain amount of ETH within a certain period of time. And so it just feels like they got the UX comparable to something like a Binance. And then the other thing is it seems like they've nailed the mechanics of the airdrop. So they didn't raise any money. And I think what that meant is that there weren't a bunch of people that were trying to dump as soon as possible. And a bunch of these, you could actually see on chain that a lot of even like large holders were buying more, which is very compelling. They did a really large airdrop. I think it was about 1.9 billion or just under 30% of the overall supply. So that always gets everyone fired up. And maybe it was just a pretty good macro time to do that because the coins are running at this point. But it gathered an enormous amount of attention. And so I'm curious, what do you guys think about Hyperliquid?
I think the UI is great. I think a lot of people are also converging on a similar UI, whether it be Lyra or Infinex or whoever, or Synthetics. Like it does feel like, and those coins have gotten a bump as a result. It's just it's a good product, and having it live before the token launch was definitely able to filter for people who actually add value. Definitely flawless airdrop. I don't know if it matters if it's more centralized or not. Honestly, I think you can make the same argument for some blockchains. But I mean, we'll see how it continues to do. It seems like they're going to have spot trading there. They're going to have all this stuff like centralized exchange listings are next. Like Bybit, I think, is putting it on its exchange, so that'll be another interesting milestone. I think it has probably more ramifications than like what is Hyperliquid? How is it doing? Like it seems like the new L1s that come out are going to do very, very well just because people now have like, it's that meme of like people sitting forward in the chair where it's like, okay, if an L1 comes out at 2, like it's go time. I think a lot of people are now cognizant of that, especially because Hyperliquid launched on Thanksgiving night and was at 10 billion, maybe even like 24 hours later. So a lot of people feel like they missed it. And it feels like they're going to try to compensate in other ways to kind of get that back with new L1 launches, even buying hype, at these prices or, hype beta or whatever you want to call it.
Yeah, totally agree.
Do you guys think, okay, so I have another question for you guys on just I've seen a lot of people saying, hey, they nailed the timing on this, but I'm not 100% sure that's really true. There've been a lot of tokens that have launched in a pretty good environment and have gone straight down. So it doesn't really seem like with Hyperliquid to me, any one thing is the silver bullet. It does seem like this team executed really well across a number of different, it seems like the mechanics of the airdrop were executed really well. They also had this insurance fund, which is that is actually, there's a certain percentage of the token that goes into the insurance fund. So they basically TWAP $40 million worth of the token, which always helps, especially when it comes to just the aesthetics of the price chart. And and apparently it's a really good product as well. So it doesn't seem like there was any one specific thing. It seems like they executed on a good amount of stuff. I have a question for you guys in terms of, I think one of the other things that excites people about Hyperliquid is it's not just a perps dex, it's an L1 also. And so in theory, in the same way that Unichain is sort of general purpose, you can build arbitrary smart contracts on top of it. So it's not just an app chain. The idea is to have other people build things on it. What do you think about the prospect for Hyperliquid as an L1? Do you slot it more as a DEX or as an L1? How would you think about that question?
I think this is kind of like core to what we were describing earlier, where apps become layers themselves, whether it's an
Yeah.
L1, L2, its own blockchain, who knows? If you get big enough, you have the opportunity to become something like that, just based on the fact that you need that from an infrastructure perspective, a throughput perspective, but you also want that for the additional control. And they're probably the only, if not maybe the only one. I know Uni is doing Unichain, but they're one of the only ones that is size enough to be able to have their own chain for their suite of applications. And the real test for that will be, are people willing and interested to move their applications over to this, because there's liquidity, there's activity, there's traders. Like, that's where you start to build this like Hyperliquid cabal potential. Yeah, and I think we haven't necessarily seen that with Uni yet. It seems like every kind of version of Uniswap is pretty segregated and segmented. It hasn't really kind of like combined in a unique way. And so I does think it leaves a lot of opportunity for someone to do it well.
You know what I've sort of noticed here a little bit is like this kind of convergence of apps and the layers that they're built on is, we used to have this pretty narrow definition of what it meant to be an app chain or a general purpose chain. And now it seems like there are at least a couple of different layers competing for like a DeFi layer or like a, high throughput DeFi layer. And I kind of look at Hyperliquid as something that looks like that. There's technically a DEX at the base, but you can build arbitrary apps on top of it as well. Unichain looks a little bit like that. The L2s like Atlas, what the Ellipsis team is building, looks a little bit like that. I'm kind of squinting and seeing quite a bit of similarity there. And maybe that's just an observation, not more of a question, but
if you are a generalized L2 or L1 and you don't have something that's working, that is something that you're known for, there isn't really any reason for you to exist.
I think people take, like, some of the takes I heard was like, this is great. Like, why do we need Monad? It's like, I'm not sure that's the exact right take.
yeah, I don't know about that.
Like, Monad is building for like super high throughput consumer application, in my mind at least. But it's easier to build out from the purple layer. You build lending, you build spot. Like, there's a very clear roadmap there. It's just a matter of if you can get to be that center of gravity. But I do think that the new L1s who have something differentiated about them, I think are good prospects. Because like at this point in the last cycle, we still didn't have AVAX, Luna, like Sol really. That kind of all happened in Q1. And then they all really ran during that Q4 Bitcoin spike. I would probably expect the same.
I want to end on just getting your guys' advice on, as we, Michael, to use your verbiage, like in the very, very beginning of that wealth effect, late stage bull market sort of phase, like any advice that you guys would have. I don't know if you guys have had any chance to look at this because it only came out a couple of hours ago, but there was a new project that got launched today called Double Zero, which I thought was pretty cool. It was, and I saw Austin Federa from the Solana Foundation is going to be like one of the founding members. So congrats, Austin, on doing that. But I just sort of skimmed the white paper, and what it looks like is it's a decentralized network which is designed to improve or solve some of the bandwidth constraints that especially high transaction, high TPS chains deal with. So I'm actually reading from a ChatGPT summary here, just to be fair. That's my version of skimming. But basically what it does is it creates a decentralized network that combines underutilized private fiber links to form a high bandwidth, low latency, resilient communication layer for distributed systems. So there's like a filtering and prioritization of traffic that actually happens at the fiber optic layer. There are dedicated links. Anyone can participate. So private businesses, you can either contribute bandwidth or plug in and consume the bandwidth. And they're actually smart contracts which do networking and routing. So it almost seems like an entirely separate layer, one step below almost the consensus layer of an L1. So it's definitely a super ambitious project. It just feels like a huge swing and something that's very differentiated. So I haven't had enough time to dig into it and develop strong opinions. Maybe we can talk about it next week, but at least it seems cool.
Seems cool. I mean, there's been a bunch of these, so I wonder how this one will break out, but I don't know much about it.
Have there been a bunch of these before? I didn't realize that.
We've seen a bunch, yeah.
Ah, interesting. All right. Well,
I do think that a lot of this next narrative and talking about like where we are in the cycle, I think the things that will work are the things that will work first. But the things that really drive the later stages of the cycle, the wave 4, wave 5, Elliott wave analogy, is things that are going to be different and things that we haven't seen yet. Right now, it's happening with DeFi first. It's happening with the base layers. Yeah. We know how this plays. And the stuff, that we're really excited about, which we announced a few weeks ago, for instance, Glow, building Solar as a service on chain, a DePIN protocol for that. Totally new, totally differentiated, like that type of an opportunity, I think is where the end stages of this cycle will start to realize that value. And if you can build something that's totally different, like there's the size of opportunity, the size of market opportunity that you have is just like 10x bigger. And so that's another signal, maybe like piece of advice in terms of where we are in the cycle, is we haven't really seen anything super differentiated that's hitting scale yet. Like meme coins, no, those aren't differentiated. That's basically NFTs, but fungible. And, is it DeFi? No, we've seen that before, multiple cycles. And is it L1s? Like, no, we've seen this before. And so until we start to see differentiation, I think we're still very much in the very, very early innings.
Yep. Agreed.
Yeah, I don't have much to add to that. I would also just say don't subscribe too much to FOMO here, because it's just so easy to give back any gains that you've made up till this point. And
look, have price targets or time targets and stick to them.
Yeah, I agree. And it's so tempting, right? So hard, because I feel like the thing that everyone forgets too is that the people call top cycles because dumb people are saying ridiculous targets. That's not top signals for me that are most meaningful. It's actually when really smart people that have a lot of money or big fund managers or whatever, those are the ones that are screaming, bloody murder at the actual top. And it's so much easier to listen to those people because they're supposed to have been there and done it before. And those are the ones that get you. So
yeah, I mean, it's different this time is not something that we've heard that much yet.
The Sequoia Sam Bankman-Fried post is one of the best examples.
The first trillionaire.
Right. It's so easy to read that and say, this isn't some internet degen. This is Sequoia writing this. They wouldn't do it if they weren't sure.
Case in point.
Not to rag on Sequoia, but it's just a good example.
Easy to.
Yeah.
All right. Fun one. All right. We'll see you guys next week.
Peace.
Later.
Cheers.